Smart people learn from their mistakes, but really smart people learn from other people's mistakes so they don't have to make them. So that's exactly what I want to do with this video, give you guys lessons, mistakes that I have made investing early on, so you guys don't have to make the same mistakes. So the first major lesson that I learned is to really invest in what you guys know a lot about. So you may have specific knowledge in maybe real estate, maybe crypto, maybe certain sectors of the stock market. Maybe you guys know a lot about tech or energy. Invest heavily into that. Don't try to diversify too much. It all kind of depends on your investment strategy and how active you want to be. But if you're going to be an active investor and not just buying the S&P 500 and forgetting about it, only invest in what you guys know a lot about. As the saying goes, when a person with money meets a person with experience, the person with experience gets the money. So this is oftentimes where you guys are gonna get crushed on certain trades. Oh, hey, there's a lot of hype behind this trade. Oh, I'm gonna buy it. When in reality, most of those gains are gone. The people that already understand it were in early. Okay, boom, now they're gonna sell off. They understand, hey, there's this date coming up. There's gonna be earnings. They're probably not gonna be, and then boom, the stock crashes and then you lose a lot of money. And then you try to sell early because you don't understand it. Or maybe you're investing in a certain crypto project because there's a lot of hype behind it, but you don't understand the fundamentals. You don't understand that, hey, there's a certain amount that's locked up, it's gonna be released, and then the price is gonna go down, then you start freaking out, and then you start selling it because you don't understand it. Same thing could be true with real estate. Okay, you're investing in certain real estate things, you don't understand this, boom, you lose a ton of money on this. Especially if you're trying to do this in a lot of different fields, you're gonna continue to get crushed. Now, that's probably gonna happen in whatever field or interest that you guys are really targeting, but you'll be able to learn from those mistakes over time, early and quickly, and then start to understand it even more. So the other thing is, the whole thing with investing is to understand something before everyone else does, right? If you understood tech and you understood, hey, what's going on with NVIDIA, what's going on with Amazon, you could see the trajectory of where everything's going in terms of tech because you really understand it. Okay, you're gonna be an early investor in those things. Or you really understood finance and Bitcoin. Okay, I understand what's gonna happen with this. I'm going to get in early. That's when you're gonna see those huge gains because you have specific and a competitive advantage in terms of knowledge or foresight in these areas. And that's only gonna happen by having a lot of knowledge in these specific fields. So if you try to diversify your knowledge too much, you're not gonna have that competitive advantage to get into things early because you really understand them. So whether it is real estate, whether it is stocks, whether it is Bitcoin, whatever it may be, invest in what you guys know a lot about. So this is a mistake that I made. I tried to invest in certain things. I tried to do some puts, some calls on certain things that I didn't really understand. I would sell early or I would sell too late because I didn't really understand what was really fully going on. And then once I said, hey, you know what? These are the things that I really understand, specifically Bitcoin, crypto, more so than anything else. I'm going to focus all my energy on that. And I'm not gonna mess around with everything else, trying to pick certain random stocks because there's some hype around it. I'm only going to invest in what I understand. And that's where I felt a lot more solid, a lot more conviction. And I feel like I saw a lot more gains by just doing that as opposed to trying to diversify into everything. And then the last point with this is all of your gains are gonna come from tail events or come from compounding interest. And if you're jumping into all these different fields, jumping in and out of trades, you're not gonna allow compounding interest to work in terms of your knowledge, but also in terms of your money. So stick into these fields you guys know a lot about. And over the long term, that's where you guys are gonna make your money really 10, 20 years down the road when all of that can really compound and work for you. Now, the second thing is when you get into a trade, know your exit, when you're going to get out or why you're going to get out. Now, a lot of people, if you say, again, you have specific knowledge, you understand certain sectors, hey, I really believe in this. This is my goal with this trade. This is gonna be a 10-year, this is gonna be a 20-year, 40-year trade. I'm holding this forever, or maybe this is a swing trade over the course of the week. When you get into a trade or you get into an investment, know what your sell or your exit plan is going to be. Now, a lot of people don't do that, so they get into something, say you have a lot of conviction in, Bitcoin, you bought it at 60 and then all of a sudden, boom, it dropped to 50 and then you sell it and you panic because you don't really know, hey, this is what my goal is with this. Now, if you know, hey, I'm buying and I'm gonna buy for the next 10 years, I don't care if it drops to 50. I honestly get excited when that happens because I can buy more. But if you don't have that exit plan, that's where things are gonna start to get shaky. You're gonna sell something early. And again, if you have that conviction and that knowledge and you don't have that exit plan, that's where you might make the mistake and sell early. And then, okay, over those 10 years, you would have been right. But again, it's all about timing as well. You can be right about what, but if you're wrong about when and you sell too early, that's where you guys are gonna make mistakes. So when you do get into trades, understand, hey, what's maybe my take profit? What's my timeline on this? If this happens, I'm gonna get out of the trade, right? If certain things change with the company, maybe the board of directors changes, maybe their earnings aren't good for 3 quarters in a row, okay, then maybe you're going to sell. This is gonna be my stop loss. Just understand when you get into these trades, what is your exit and stick to that. Now, the third one is don't trade unless you're going to completely dedicate to that. So for me, my main focus is my business. Then the secondary focus may be social media for that business. Third focus may be something else. I can't dedicate 100% of my time to trading, so I shouldn't be trading. This is a mistake that I made a couple times where, hey, I'm trying to trade this, or I'm gonna make this trade over the course of the week. And again, again, I'm getting into things that I don't know enough about because that's not my main focus, or I haven't dedicated enough time to really truly understanding the process of trading, all the technical aspects, so then I end up losing money. So if you're going to trade, that's completely fine. You can be successful, but you're not going to be successful if you do it for a week, 2 weeks, 3 weeks, maybe even 6 months. You need to be able to dedicate 100% of your time and energy to that craft and do it for a long period of time if you want to be successful. Now, if that's not going to be and you're not going to be a full-time trader, stick to investing long-term and stick to investing again into the things that you guys know. That's where a lot of people are going to go wrong. That's where I went wrong, where I'm trying to trade. I'm also trying to trade things that I don't fully understand. And if I did fully understand it, I should probably just buy and hold anyways. That's where all those great returns are going to be anyway. The fourth one, kind of going off this, I'm sure all of you guys have heard it. Time in the market is going to be timing the market. So again, don't try to trade, don't try to time the market, just buy, hold over the long term, again, in specific things that you guys know a lot about and that you have a lot of conviction on. Now, number 5 is how you structure your portfolio. So a lot of people are just going to say, hey, you know what, buy the S&P 500, put 100% of that, and that's it, and just forget about it. Now, I think if you want to make outsized returns, you have to be a little bit riskier than that. Even if that's what you guys want to do, okay, put 80% of your net worth or 80% of your investments are going to go into that, say, S&P 500. I would recommend just putting it into Bitcoin. That's a much better asset class. And then have 20% where you can say, I'm going to take 10%, I'm going to take moderately risky bets here where I think, hey, this either has a chance to go to 0 or this could 10, 20x. And then you take another 10%, say, hey, I'm going to really kind of gamble or take some really big bets that could be risky, but if it works out, this could be a huge investment, a huge gain. So I think this is where people go wrong, where they'll either put 100% in very safe, very secure, and they don't really take any risk, or they take 50% of their portfolio and risk it, and then the other 50 is insecure, and then that's where they lose a ton of money. So properly balance your portfolio in terms of risk to reward. So understand where you guys are at in your investment journey. If you guys are older, yeah, you don't have the ability to take those huge, crazy risks. But if you're a bit younger, yeah, maybe you could be 50-50, or you could be 60-40 into something relatively safe, continuing to build for your long term, but understand, hey, I have time. I'm a little bit younger, I can take these risks because you have more chances. And something that I said in one of my other videos, which is from the book, The Psychology of Money, is you really only need to be right once, right? Say again, you have this specific knowledge, you really truly understand something, be willing to take a risk and have enough on the line where if you are right, that's the only time that you have to be right. So again, that example could be Bitcoin. Say in 2017, even now, right, over the next 10 years, hey, I really understand this, I think this is the one. If I'm right on this, nothing else is going to matter. All those other investments are going to be essentially just a bonus on top, right? Because you are so right in this one area. So you do have to be willing to take some risk, and you need to understand where you are at, and then you need to allocate a certain percentage to that and be willing to take that risk, because sometimes that 10-20% of your portfolio that you risk could end up being the majority of your gain. Those are really the major lessons that I have learned over the course of whatever, 3, 4, 5 years. Invest in what you guys know what you're doing, know your exit plan, and just simply, for the most part, buy and hold in high conviction trades that you guys know a lot about, and you'll probably make a lot of money. That's what I plan to do over the next 5-10 years. We'll see how it goes. Hopefully this helped you guys. If it did, hit the like button, comment. I appreciate it. We'll see you guys next video soon. Peace.